You don't lose in the market the way you think you do. You don't lose because the chart fooled you. You don't lose because of bad luck. You lose because the moment money appears in your account, your mind changes shape. It tightens. It speeds up. It starts whispering that you're smarter than you were yesterday. That whisper is where the theft begins. Every undisciplined trader believes the danger is in the entry. They obsess over signals, patterns, news, indicators. They treat the entry like a sacred ritual. But the real test begins after the trade is working, after you're green, after the market has handed you something fragile and temporary. Profits are not owned. They are rented, and rent is due the moment you stop respecting risk. Most traders never understand this. They think discipline is about stopping losses. It isn't. Losses are easy to control compared to success. A loss humbles you. A loss slows you down. A win intoxicates you. A win convinces you the rules were suggestions. A win invites you to press harder, trade bigger, trade faster. That is when the market waits. It does not chase you. It does not attack you. It simply stands still while you unravel. It lets you remove your own safeguards. It watches you trade when you should be waiting. It watches you size up when you should be protecting. It watches you believe that momentum in your account means momentum in your judgment, and when your judgment is gone, the market collects, not out of cruelty, out of indifference. The market is not your enemy. It has no memory of you. It does not know your name. The only opponent you will ever face is the version of yourself that cannot sit still after a win, the version that confuses activity with progress, the version that would rather feel excitement than build consistency. If you do not master that version of yourself, every profit you make is temporary. Every gain is a loan waiting to be recalled. The traders who survive are not the smartest. They are the ones who can hold money without needing to prove anything. They can sit in silence after a win. They can stop when stopping feels impossible. They understand that the hardest trade to manage is not the losing one. It is the winning one. The market does not take money back with violence. It takes it back quietly, one careless decision at a time. The trader who gives back profits rarely notices the moment it starts. There is no alarm, no dramatic collapse, just a small relaxation of standards, a slightly bigger position, a trade taken out of boredom instead of clarity. Discipline does not disappear in a single act. It erodes, and erosion feels harmless while it's happening. You tell yourself you deserve to push. You tell yourself you're in rhythm. You tell yourself this is confidence. But confidence without structure is just permission to self-destruct slowly. Most traders fear losing streaks. They should fear winning streaks handled badly, because a loss reminds you of gravity. A string of wins convinces you gravity has been suspended. It invites you to walk closer to the edge. It tells you the fall no longer applies to you. The market never argues with that belief. It waits for the proof. Undisciplined traders do not blow up because of one terrible trade. They blow up because success removed their brakes. They stopped measuring risk. They started measuring excitement. They traded to feel powerful instead of to execute a plan. The market punishes emotional spending of confidence. You cannot spend confidence like cash. It is not currency. It is a liability if it is not anchored to rules. Every time you trade outside your structure after a win, you are borrowing against your future stability. And the interest is brutal. Patience is not passive. Patience is an active refusal to participate when conditions are wrong. It is the willingness to look at opportunity and say no because it does not fit the framework that protects your survival. Survival is the first job. Growth is the second. Most traders reverse that order. They chase growth first. They treat survival as optional. They size their positions like gamblers trying to accelerate destiny. They want the leap, not the staircase. The market does not reward leaps. It rewards repetition. Boring, disciplined, mechanical repetition. The trader who keeps profits understands something painful. Money earned quickly must be defended slowly. Fast gains demand slow behavior afterward. The faster the rise, the calmer the response must be. If you celebrate profits with aggression, the market will translate that aggression into losses. There is no exception. The undisciplined mind cannot hold abundance. It leaks. It looks for ways to convert stability into stimulation. It invents trades to feel alive. It mistakes motion for purpose. Stillness is harder than action. Waiting after a win is harder than recovering from a loss, because after a loss, restraint feels logical. After a win, restraint feels like betrayal. It feels like you are denying momentum. It feels like you are interrupting magic. There is no magic. There is only probability, structure, and behavior. The market offers opportunity in cycles. Your job is not to force the cycle. Your job is to recognize when you are emotionally unfit to participate. The trader who cannot step away after success is as dangerous as the trader who revenge trades after failure. Both are controlled by urgency. Urgency is the signature of a weak mind in a strong market. A professional mindset does not chase emotional continuity. It resets. After every trade, win or loss, it returns to neutral. It does not carry the emotional residue forward. It does not stack excitement on top of exposure. Most traders stack. They layer emotion onto position size. They compound feeling faster than they compound capital. And when the inevitable pullback comes, it is not just financial. It is psychological collapse. They were not managing trades. They were managing identity. Every undisciplined trader secretly wants the market to validate them, to confirm intelligence, to confirm worth, to confirm superiority. And when profits appear, they treat them as proof of personal elevation. That belief demands to be punished. The market is not interested in your identity. It does not care if you feel brilliant. It does not care if you feel broken. It responds only to behavior. Clean behavior survives. Emotional behavior cycles between euphoria and damage. You cannot negotiate with that reality. The trader who keeps profits respects emotional neutrality more than profit size. He would rather end the day slightly green and mentally intact than wildly green and psychologically unstable, because instability compounds faster than money. One reckless day trains the brain to crave recklessness. One oversized win rewires expectations. Suddenly normal gains feel small. Suddenly patience feels like starvation. This is how traders sabotage their own scale. They outgrow discipline before they outgrow their account. And the market always reclaims the difference. There is a quiet strength in stopping, in closing the platform while you are ahead, in feeling the urge to continue and refusing it. That refusal is not weakness. It is the highest expression of control a trader can demonstrate. Anyone can click. Very few can stop clicking. The market does not destroy traders who are ignorant. Ignorance can be corrected. It destroys traders who know the rules and choose emotion anyway. That is a deeper failure. That is self-betrayal. And self-betrayal compounds. Every time you violate your structure, you teach your mind that rules are flexible. Once rules are flexible, risk becomes invisible. Once risk is invisible, ruin becomes a timeline, not a possibility. The disciplined trader understands a brutal truth. Protecting profits is harder than making them. Making money requires skill. Keeping money requires character. Skill can be learned quickly. Character is built through refusal. Refusal to chase. Refusal to size up impulsively. Refusal to trade boredom. Refusal to let a good day become a dangerous day. The market does not demand brilliance. It demands emotional consistency. It demands that you behave the same way when you are winning as when you are losing. The same position sizing, the same filters, the same patience. Anything else is ego disguised as strategy. Ego wants acceleration. Discipline wants longevity. Only one of them survives contact with reality. If you cannot sit quietly with profit, you do not own it. It owns you. It will drag you back into the arena until it has stripped you of the illusion that you were ever in control. Control is proven in restraint. Not in aggression, not in volume, not in speed. In restraint. The trader who keeps profits understands that the market is a mirror. It reflects internal disorder with financial precision. Every impulsive thought has a monetary consequence. Every lapse in patience leaves a footprint in the account. You are not trading the chart. You are trading your nervous system. And until your nervous system is trained to tolerate stillness, success will always trigger self-destruction. A mind addicted to stimulation cannot manage abundance. It will manufacture crisis just to feel familiar again. This is why so many traders hover near break-even for years. They are not stuck because of strategy. They are stuck because calm feels unnatural. Stability feels empty. They sabotage progress to return to emotional volatility. They call it bad luck. It is conditioning. The market does not take profits back randomly. It takes them back from traders who treat money as excitement instead of responsibility. Every dollar earned carries an obligation. Behave as if it can disappear instantly, because it can. Respect is the only lock. Not hope, not confidence, not optimism. Respect. Respect for risk. Respect for limits. Respect for the fragility of success. The moment respect fades, the countdown begins, and the market does not rush the process. It lets you drift. It lets you believe the rules were excessive. It lets you feel clever for surviving without them. Then it removes the illusion in a single sequence of trades that feel unfair but are mathematically earned. Undisciplined traders call that betrayal. Disciplined traders call it consequence.